Morning everyone. This is Ramraj Pai. I head up the India Impact Investors Council. And on behalf of the IIC, it's indeed a pleasure for us to invite you to the launch of the India Blended Finance Collaborative, which we are beginning today with the kind support of USAID. I just have a very quick presentation to just give you a little bit of perspective as to what the collaborative is all about, what we are proposing to do, and essentially create this as some sort of a feedback session where we will want inputs from all of you who are all important parts of the industry so that this collaborative can be something which is built ground up. After I finish my sort of brief presentation, we will have Karen from USAID provide our opening remarks, and then we have an open house for about an hour where we will want to take inputs in a somewhat structured fashion from everyone here. And we'll end with the inauguration of the Blended Finance newsletter, which we are planning as a bi-monthly newsletter, and that's really the broad flow of what we propose to do. Broadly, a quick introduction to IIC. We are a not-for-profit Section 8 company. We set up about 8 years back to essentially build the impact investing ecosystem in India. Historically, we were always focused on the equity impact investing part of the space, but over a period of time, over and above equity, we have now started moving into other areas like climate tech solutions, blended finance, and so on and so forth. We have about 57 odd members today. And we are seeing now increasing interest from a variety of players, be they corporate, CSR, and other people who are interested in seeing how capital can be used more innovatively, whether it is development capital, concessional capital, or even commercial capital for impact. So broadly, I just don't want to spend too much time on this. IIC has a fairly simple kind of an agenda. How do we bring more capital to the social impact sector? That's really in one line what we do. We don't do too much work with entrepreneurs. We mainly try to work with capital providers, whether they are investors, asset managers, it could be development foundations and other people. So I think bringing more capital to the sector, moving beyond equity into other forms of impact, beyond just equity impact investing, definitely working with government bodies and regulators to create that ecosystem. But effectively, the entire thing is really around how do you bring more capital to the social impact sector. That's a single point agenda with which we work, and we would want to continue to stay in that space. Just a quick sort of broad sense of all of the members that we have. So I'm now going to get into the little bit of the meat of the presentation. But before I go there, I thought it may be useful just to put together just a few lines on what is blended finance, because that may be a term which not everyone necessarily will be familiar with. So we've just given a very high-level sort of a broad introduction to what is blended finance, which is really what we are loosely calling as the strategic use of development funds, whether it is from government, philanthropic sources, and the idea is to mobilize private capital. Given a situation where the availability of capital is very short for development work, how is it that development funding can be leveraged much more effectively to create large-scale impact is really what we loosely call blended. And the whole idea of blending is how do you mix up various forms of capital. I'm just putting this up because we have various kinds of people in the audience, and it's important that we are able to take together a wider base of people to kind of, historically, our markets have been very segregated. So you had an equity market, then you have a debt market, then you have a philanthropic market, you have a CSR grant market. The question is, when there is such a shortage of capital and such a dire need for impact, how can you bring these together to make the whole impact a lot more, if I may say, sort of deep, and can it go further? So every dollar, can it go further, is really what blended finance is all about. Clearly, what we see today in the market is that, this is a new concept, at least from an Indian this thing. So it is still a fairly nascent market. We don't do too many transactions in the country around the blended finance. Therefore, it's a subscale market, insufficient data, it's an underdeveloped ecosystem. Regulatory and legal environment is something which needs to be worked upon. And there is limited participation of mainstream capital. These are some of the challenges. Nothing specific to blended finance. Any market which is just emerging has these kind of problems. And therefore, it is important that we are able to, at some level, work very actively with the ecosystem to try and catalyze it in some fashion. And that's really what the Blended Finance Collaborative is all about. So one is, how do you really bring a data-backed approach to understanding this ecosystem, what challenges and opportunities they face? How do we help the sector, particularly those who are involved, get more knowledge, get more, sort of awareness of what could be the structures, what could be the products, how can they participate? So if today somebody wants to participate in the sector, how can I help that organization? How can the IBFC help that organization is really at the core. And the third is really, if there is somebody who's interested, can we kind of at some level showcase to them as a collaborative transactions which are out there, sector level transactions, how is it that we can showcase to them a lot more such that they come closer and closer to participating in transactions. That is really the whole idea of the collaborative. And therefore, we believe that, given the state of the market, there is a fairly substantial opportunity to unlock greater capital. And there can be various ways in which this can be unlocked. Okay. So one of the ways which some of you may be familiar with is by supporting outcome-based financing, which is pay-for-performance structures. I think a big part of the market is also around credit-enhanced or guaranteed investments, which is a space where we see that there is substantial interest, relatively lower-hanging space, and we believe that this is a space which can take a lot more capital. In fact, when we speak to a lot of people on a one-on-one, they are doing some form of credit-enhanced structure. They just don't know it in that sense. That actually makes us very excited to see how can we really consolidate a lot of those players. I just met 2-3 people and they said, this is something we do in a small way, and somebody is doing it in Chhattisgarh, somebody is doing it in Jharkhand. So in various ways, grant capital is being used to support transactions where maybe the underlying people are not credit worthy enough, so the grant money is being used in some kind of support. The last one is really by providing technical assistance for strategic projects and so on and so forth. So really, for this opportunity, I think getting the market together to share the knowledge at the local level, building the capacity, and also very importantly, working with the government, partnering with SEBI and other people, and trying to showcase to them what is the opportunity and how is it that, they can kind of work with us, particularly in the construct of the social stock exchange. Is there a way for us to think about putting together regulations which are a lot more flexible in terms of things like DIBs and so on and so forth? Is there a space for us to relook at the regulation for social venture funds? Things like that are clearly something which is on our agenda. Okay. Key pillars of IBFC quickly, I think clearly one is research and insights. Second is knowledge dissemination. We recognize one thing is that when we meet people individually, lots of people are doing lots of things, but we also see very interestingly that much of it is not well known to the larger market. So I think disseminating that knowledge on a systematic basis is very important. The other thing we see is lots of people are doing interesting transactions, and potentially there could be other partners, but there is no system by which they can actually approach a larger market to explore partnerships. It's all on a one-on-one basis. So is there something that we can do in terms of really building those partnerships and therefore engaging a wider base of partners? And the most important thing, as we said, is on the policy dialogue. Very important for us to engage with the government, with the SEC, with the Ministry of Finance, as well as line ministries, to see is there a potential for us to partner and dialogue around policy and regulatory issues. Okay, quickly, the IBFC in action, what can you expect? I think two broad heads. One is broadening the understanding, second is deepening the engagement. These are the two broad heads under which we will work. Broadening the understanding is really for the part of the market which doesn't have as much exposure and knowledge. How is it that we can support them conveniently to learn a lot more about what this space is? It's a new space. The combination of development and finance is a new area for a lot of people. So how can we really broaden that understanding, support capacity building in this particular space, and also importantly, advocate the opportunity for blended finance through a series of things like interactive masterclasses, put together an online knowledge repository, things that people can refer to know what's happening out there and so on. The deepening the engagement is the other dimension, because so the first one is really broadening the funnel, basically putting a lot more people into the funnel. The deepening the engagement is ensuring that what's coming out of the funnel as a trickle also continues to be substantial. So what we are really looking there is building more dedicated sector-specific workshops, deep dives into what is happening in a particular sector, what are the opportunities of blended finance. Let us say there is a bunch of people interested in climate opportunities in blended finance. Is there a platform today where that can be discussed and people can come together? That doesn't exist. That is exactly what the collaborative is trying to achieve. So peer learning forums, sector white papers, some kind of deal tracking and deal spotlight. Even today we know that there are people who are trying to do transactions and they have 2 partners, but maybe they could have had 5 partners. It's just that there is no process for them through which they can systematically reach out to a wider base of people. So that's really what the IBFC in action is sort of all about. Okay, that's in summary a little bit about what the IBFC is, what the proposal or what we think we should be doing. This is obviously based on some feedback, some inputs that various players have given. But a lot of you here have a lot of exposure and maybe transactional experience. So the whole idea here is for us to kind of get your feedback and your inputs, and that's something that we will do in our next phase. But before we go there, we would like to invite Karen Klimowski, Deputy Mission Director, USAID, to provide some introductory comments. And Karen is a career member of the US Senior Foreign Service. She's worked in development for over 30 years. She currently serves as the Deputy Mission Director for USAID India, where she advances the US government's foreign policy by using diplomacy and development assistance to evolve the US-India strategic partnership. So that's a brief on Karen and her sort of interest in this particular area. So Karen, maybe a few remarks from you, and then we will get on to the more open and interactive session.
Great. Thank you so much, Ramraj. And it's a pleasure to be here today. And I met a few of you, and I look forward to speaking with others as the day goes on. And it's really exciting to see, we're happy to launch the India Blended Finance Collaborative today, and to partner with the India Impact Investors Council on this initiative. We at USAID really feel that it's important to bring out blended financing. It's nice to see so many people in the room that we have partnered with in this space and what we can do together. And we believe that private enterprise is a powerful force for lifting lives, strengthening communities, as well as accelerating sustainable development. The new collaborative launched today, we hope, will make it easier for stakeholders to participate in blended finance while providing them the tools and knowledge necessary to produce successful, scalable, and sustainable results. And I think many of you in the room that we've partnered with are the leaders, and we really look forward to hearing from you today, and the leaders of how we mobilize and get more involved in this space. I want to provide a brief background on what USAID's approach to blended finance in India and share a few examples of what we've done to date. So USAID really recognizes the private sector as the key driving force for India's inclusive development. And we're continuing looking for ways to enhance our partnerships with not only the private sector, but civil society, other donors, and government, and to use our convening power to bring everybody together so we can create programs that are sustainable and that can have larger impact. We all have the goal of reaching India's low-income, marginalized, and vulnerable populations, and that we believe that the right mix of technology and bringing these different players together can really create a space where we have more impact and leverage technology and knowledge so that we can reach those in the most vulnerable. And as Ramrod mentioned, blended finance allows the government, philanthropic organizations, and private sector to work together towards these shared goals that I just mentioned. As U.S. government's premier development agency, USAID plays a unique role in blended finance. I was mentioning to a few of you earlier, I have served in 6 different African countries, in India, the Indonesia, and the Philippines. And seeing the space of what we're doing in India in this space, I think is really remarkable and is an example and leader for the rest of the world. I have not seen the type of blended financing going on in partnerships in any other country where I've served. And so I do think there's a lot of great examples here and a lot of great knowledge that we should continue developing. So we at USAID we help to identify the issues to tackle, use our convening power to convene public and private sector, draw on global experience, and bring the technical and programmatic experience. And we want to test new technologies and approaches together. We tend to ask a few questions as we're going forward when we're looking at programs and the value added for USAID and value added to the programming and how we contribute to the sustainability. So there are a few questions we look at. What are the development challenges that we're trying to solve? How can blended finance be used to solve them? Can the private sector do this independently without USAID or other donor partner support? And if not, how can USAID add value? And then thirdly, will the intervention be more financially sustainable as a result of our support? So whenever we're embarking on blended finance, those are the key questions that we ask ourselves. And I just now want to share a few examples. So as everyone in this room knows, an estimated 121 million Indians lost their jobs during the COVID-19 lockdown when it started in March of 2020, with over 91 million of these individuals employed in the informal sector. So in 2020, USAID partnered with the Michael and Susan Dell Foundation and Omidar Network India to support the Samhita Collective Foundation's establishment of the Revive Alliance, one of the largest blended finance alliances in India. The Revive, who aren't familiar with Revive, the Revive Alliance helps small businesses weather the economic impacts of the pandemic by providing access to grants and returnable grants, helping them build a credit history, so people who previously could not access credit, and providing a pathway to mainstream finance. Together, to date, we have reached 173,000 individuals and focusing really on women, youth, and other marginalized populations. And then building on the successes of the first year of Revive, in 2021, Revive expanded its engagement with other U.S. companies, including S&P Global India, Microsoft, LinkedIn, Amazon, and Google. And the Alliance continues to set new goals, hoping to benefit more than 10 million workers over the next 5 years. Additionally, and I was in Mumbai last week, and I met with one of the Revive recipients who was able to expand their network of artisans and artists and then create a market for the artists whose income had went to zero during lockdown, and then created and expanded to selling on Amazon and other networks. We're meeting with the artists and just hearing their stories of how they were able to now sustain and live. So it's really having the impact at the lowest level. And then additionally, as the pandemic began, USAID, and as many in this room, recognized the need to engage India's startup ecosystem. So in 2020, USAID also collaborated with IPE Global and other private and public partners in India, including Niti Aayog, IndusInd Bank, Axis Bank, and Caspian Impact Investments to develop the Samrid Healthcare Blended Finance Facility, which combines the public and philanthropic funds with commercial capital to scale and sustain the high-impact solutions that I talked about. With a $250 million commitment in debt and grant financing, the initiative has leveraged more than 10 times its initial investments to date. But more importantly than the money generated are that 25 health innovations have been scaled and sustained in less than a year. And this includes temperature-controlled shipping containers, which was really important when we were doing the vaccine rollout for COVID vaccine, because keeping those vaccines at the temperature needed to ensure cold chain, there was some really innovative ideas that came out of that. Mobile health units, again, this was a lot around the COVID response and making sure that we were getting oxygen support and vaccines out to the last mile. And to date, we've benefited more than 20 million people in the reach of what's been developed under SAMRID. And I know I spoke to a few other people that have been starting to work with SAMRID and signed an MOU, and so we look forward to that collaboration also growing. And then finally, Ramraj mentioned a DIB, and we have used this pay-for-success model where we worked with our partner to define clear results at the outset of a project and paid for the initiative only if the outcome was achieved. So from our perspective, the pay-for-success model has the advantage of shifting the risk of completion from us, the traditional development funder in our grants, to the implementer usually a private sector organization. So in 2018, USAID piloted a development impact bond where UBS Optimus Foundation provided the financing to get health facilities in Rajasthan up to government quality standards. And so impressively, our partners exceeded their targets by 12% at a cost less than anticipated, supporting more than 400 hospitals and improving the care for over 450,000 mothers and newborns. So following their successful results, the donor organizations USAID and Merck for Mothers repaid the UBS Optimus Foundation, creating an 8% return for the investor. So the model proved to be financially viable for the private investor, cost efficient for the funder, and most importantly, impactful for the final beneficiaries, mothers and newborns in Rajasthan. And given that success, USAID is now using a similar approach to improve outcomes for tuberculosis patients in Madhya Pradesh and to improve foundational literacy and numeracy in early grade education. So those are just a few examples of the opportunities that blended finance approach presents for development, and just a few examples of what USAID has been working on in India. And as Ramraj mentioned, the new India Blended Finance Collaborative, which we're launching today, will help supercharge our efforts and bring in new partners to blended finance. The collaborative will support robust research, knowledge sharing, and provide opportunities to create partnerships and engage with the government of India. And as we establish the India Blended Finance Collaborative, it's most important to maintain a focus on vulnerable and marginalized communities and include them in their own success. And USAID takes this approach for two reasons. First, because every person is equally worthy of dignity and respect and should be included in the development processes. And secondly, because inclusive development by including the beneficiaries yields better development outcomes from the start, from the design phase all the way through implementation. So I want to thank everybody again for participating in this important and timely event, and I look forward to the robust discussion that we'll have next. And in India, as I talked to most of you know Apoorv, who is really our brains behind this whole thing, and Brian Byrne, who leads the office that Apoorv sits in, and they are our technical experts and really the movers and shakers at USAID in building the relationships and making these things happen. So they will be great resource people for you too as we move forward. So thank you all very much.
Thank you, Karen, for those words. We're just going to quickly move on to the meat of the work that we plan to do today, which is really to have an open kind of a discussion around, what we should be doing and so on and so forth. We want to, have this as a very structured discussion around 3 or 4 broad heads, so that, and we ensure, we ensure that, 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 we ens Vedant, can you just go back to the earlier one? Yeah. So to ensure that we are able to have a very strong and coherent structure around the points. So, one of the biggest worries that we have in a discussion with a large number of people is that you will get many, many wonderful points, but at the end of it, we aren't able to really absorb sharply the 3-4 things that we as a collaborative should be doing. So to kind of moderate this discussion, I invite my colleague Pragya, who's leading this blended finance collaborative, to sort of put together some initial thoughts, and then we will open it up for sort of conversation around some of the specific points that we have. Over to you, Pragya.
Sure. Thank you, Ramraj. And again, very good morning to everybody. And thank you, Karen, for the lovely remarks and for a detailed introduction on the work that USAID is doing. I think it's incredibly important to set the context for the discussion as we go forward, that post-pandemic, the need for blended finance, at least at how we see it at IIC, it's significantly risen. And that's what we'd like to, stagger into the discussion as well. So if you can move forward into the next slide. I think some of these questions you all would have already received. So we've got it in 2 parts. The discussion will be segmented in 2 parts. The first will be around the market perspective and market learnings and experiences that all of you have to a large extent. And also maybe to an extent a much more detailing on products like credit enhancement tools, outcomes financing. So we'll see how we progress with the discussions and then structure it accordingly. But few quick notes before we start off with the discussion. I'll just request everybody to maybe just quickly introduce your name and your organization just for everybody's reference when you start off. And also, since we would like maximum participation, so we'd love it if you are able to keep it a little brief, even though I'm sure you would have lots to share, but just to give everybody a chance to participate, just bear in mind that as well. So the first question as we move forward is around market perspective. And as Karen very rightly called out, given the pandemic scenario and the post-pandemic scenario that we are in, we see a lot of pressure on traditional developmental resources. And what is your views and what is your perspective that you see as we go ahead on what are scalable models, scalable transactions? Is blended finance a solution to some of the challenges that we are facing, and your views and perspectives around this? I would love to invite people to speak, but I'll leave it to the floor now. Please.
Yeah, just to give this a little bit of context on this question of the relevance of this market. I mean, there is a contrary, point of view to the whole idea of blended finance, that it's really a hammer which is looking for a nail, is something that many people have told us. And we believe completely to the opposite. But I think it's something that is important for us to really debate and discuss, that is there really this strong sort of desire to really blend? Or are we very comfortable, to say that, yeah, there's equity, there's debt, and there's blended, and there's grant, and, it's all kind of going well? Because I think this is a very central kind of question that needs to be addressed, and we need to hear views. And I think it's perfectly fine, if there are any contrary views. But I think to us, this is the core question around market. The next question, as you can see, is around products. What if blended finance is relevant? What are the products? And the last is, if this is what it is, then how should we as an IBFC engage into that particular market? So that's really what it is. So we're just taking it one by one so that we can kind of go into one step and then go next and so on and so forth. So let me just sort of just stop it here and then open it up for any specific points on the relevance, on importance of this market, and what opportunities and gaps do we see.
For putting this collaborative together. I'm Karan. I work with UNDP, and so we've been working in the ecosystem around sustainable finance and blended finance closely with IIC as well. So I think that there is tremendous potential for it, which I think everyone here agrees. But I think what we've seen now over the last perhaps 2 years is that there is an enhanced recognition within government for the need for blended finance as well. Right? I think that earlier there was an approach that yes, this is great, we should have more of it, but it was not backed by a willingness to perhaps go a step further. And obviously this work is a very long, hard sort of grind, right? For blending, I think in a system that is geared towards preventing the intermixing of different forms of capital, that a lot of the work of this collaborative needs to be on constantly following up and presenting to government at various levels decisions based on our learnings together with IIC and others is that a lot of this work is not necessarily happening at the highest levels, but it's happening at sort of intermediate levels of government, and that is where the focus of engagement needs to be. And they are the ones that will convince the higher-ups to look at regulation changes around CSR, around guarantees, and other aspects. I think perhaps just one more bit that I'd float is also around more focused, as we were talking about capacity building as an objective. I think it's when we look at the ecosystem of stakeholders, we should also include government stakeholders very much as part of that, right? So, and not just at the central level, also at the state level. So I think that's perhaps two things, and I'll come back to some other points later.
So I think I'm Nidhi Bhasin. I am leading NASSCOM Foundation, and I think if NASSCOM is the industry body for the tech industry, and we are the foundation, so we are part of the NASSCOM ecosystem. Now this whole blended finance thing is something I would admit is new for me, new for the foundation. But if one tries and understand and taking from what Karan was saying, yes, I can see that there is a willingness in the government, but I think the biggest gap out here is the government itself doesn't understand this whole concept of blending finance. And since we work with CSR, we work with the corporates, I think the current rules are not making life easy for anybody. So we can say that yes, we all need to collaborate. We can all say that to the 17 SDG, we need to meet that collaboration. Blended finance is all about collaboration, but the regulatory framework is not helping in that. So my limited understanding is that yes, there is some intention, but is it into action? Because unless the change happens at the policy level, unless the government gets into it, I don't think we will see small things happening, but that's where I feel one gap is here, and that needs to be addressed. And yes, without the willingness, without the action from the government, not much will change out here. And secondly, again, in my limited understanding, is that this whole blended finance concept is very heavy on cost, because the time to convert it and build it up is pretty long. And then since I work with CSR, I can only talk from a CSR point of view. Nobody has the time and nobody has the money to invest into something like this. So that's where the question marks come. That okay, if you want to work on a concept of like this, are you willing to put in that kind of money? And with again, I'm going back to the MCA, the CSR rules. If your turnaround time is only 12 months, can you really work on something like this? So these are gaps if we can address, and if this forum in collaboration can help to address some of these gaps, I think this is a brilliant model and the country really needs this.
Yeah. So I have 2 points on the market side. The first is like where's the market, where the deal making happening. So it's very tricky because first there's no market, it's more like OTC, and the second is it's a very ineffective and inefficient way of matchmaking between the donors and the recipients of that kind of funding, and then so that's very inefficient. I've seen this, so there are lots of people in corporates willing to give grants and CSR funds, but the kind of projects they want to do and then finding implementing agencies to get that kind of work, that's very inefficient. So that's where first point is the market side. We need to build some efficient platforms. Government of India has built one platform, I think last month, and but again that's not enough. We need to build at a private level also much more efficient, effective platforms. That's the first part. The second part is, I think, a more a philosophical question, which is the question between complete philanthropy versus not-for-profit versus for-profit. So I think when we talk of blended, in terms of what's the intent point, is sometimes a bit fuzzy. Whether are we looking at a pure expense, whether we are looking at capital asset building like hospitals and other infrastructure which can continue, or something, and again the risk part, the risk capital, because today hospitals are profitable, today schools are profitable. So that's not like completely expensive. Tomorrow they start generating profit. So who owns that profit? Where does profit goes back? Can that part of profit be flowed back to the people who actually provided the risk capital? And that's where the blended concept coming in. And third is the security part. How do we securitize this whole thing? So if we talk of warrants, if we talk of holdings in societies, so holding in society is very infungible today, so if or in trusts or in other structures which today own these not-for-profits. So how do we make these securities more fungible, so that tomorrow if I want to put take my money out of a healthcare society and put that into education, I can do that. So that kind of structuring we need to really work on to see that. So these are the market side points. I'm refraining to go on the policy side, because again that's another discussion. But
Sure. I think we've heard quite a few of the challenges, and both in terms of scalability as well as the need to engage with government much more largely. I would love to hear if somebody wants to add to that question, or maybe give, I think Sumesh, you've raised your hand sometime, and then maybe we can go to IP Global also. Yeah.
So my name is Sumesh. I represent the British High Commission, Foreign Commonwealth and Development Office. We work as part of British High Commission in managing the investment portfolio, and I think a lot of points that Karen made in her opening speech resonates with the kind of work that we are doing. Now coming back to the point that Pragya you made on highlighting some opportunities, and just to mention that one of the opportunities that we see, coming back to the point that Karen made on tech, we see a huge opportunity in tech, where development capital can play a role in making impact and disrupting and helping that capital reach out to the poor and the vulnerable, and helping address that challenges. So for the last or 3 odd years, we started out with some baby steps in this sector, where we started investing into tech focused startups and funds, and try and see how that pans out and what is the kind of impact and results we get. So the results have been really encouraging, and that's where I thought I should probably come in to say that how blended capital in terms of both grant and technical assistance has worked in creating opportunities for these funds. Some of our recent investments in partnership with State Bank of India has really come out well, where some sectors like in climate tech, health tech and edu tech have really helped us reach right at the bottom of pyramid. And I think in terms of policy support, again, we've seen encouraging results from encouraging feedback from our investees, who tell us that even with the focus of government on using startups as an engine for growth and job generation, has really helped our funds pick up momentum on that. So I think that's mainly on that. And the second thing is, I think again this space is somewhat uncharted. Not many DFIs in this space. People still look at startups as more of internet driven and e-commerce and all of that. But I think there's a huge space, especially with funds drying out for startups. It's a huge space where DFIs can come in and make an impact. So I'll stop at that. Thank you.
Thanks, Pragya. I'm Himanshu Sikka. I lead the Samrit Healthcare Blended Finance Facility. A lot of very valid points have been made on the role of government, as well as what kind of entities one should be looking at. But if you look at the basic construct of the blended finance space, there are 2 or 3 key stakeholders there. One is the social enterprise, or the enterprise would be a startup who is trying to solve a social cause, where we all come in, or where the philanthropic capital wants to invest. Second is your investor, whether it's a bank, IBFC, or a financial institution. And third, I would say, is the government. From the banking point of view, or from the financial institutions, what we have seen is that de-risking of these investments is very, very critical for them. Their risk appetites as it stands in the country, whether it's public sector banks, whether it's NBFCs, either does not allow them to invest in such enterprises, which may be very early stage, which may be not profit making right now, or not at a kind of scale that they can work with, or don't have the collaterals to support the debt that they want to raise. So for the banks, it becomes very difficult to de-risk it. Now, government has been trying to do a lot of things in that space. During the COVID times also, a 50,000 crore line was specially put in for providing healthcare enterprises with affordable capital. But the uptake was again very difficult, because banks, for 2 reasons. One, the de-risking side was still a problem. And the second big challenge was access to the deals. For a bank where you have bankers and full credit goes to them for the skills that they bring on table, they possibly don't have the expertise to understand a healthcare enterprise, how it can scale up, or whether it can scale up or not. They are very good in seeing equipment finance kind of things. But when it comes to a new age technology, a startup, whether it will scale or not, that skill set is missing. And that kind of deal flow is also missing towards them. From a social enterprise point of view, it's purely getting capital at an affordable price, which can help them grow their enterprise, which does not lead to kind of diluting their equity from the very beginning, which can help them again in long term to be a sustainable business. So that's what at least at Samrid we have been trying to do over the last 2 years, is to address these 2-3 challenges. Ensuring enterprises, good quality ones get selected, we tie them up with the banking partners, de-risk the investment for them, and take government support more in form of advocacy and support, so that wherever the business is focused from B2G, establishing those linkages. So, but beyond that, there is very little that we have required the government support for. So while at the policy level, of course, going forward to ensure more philanthropic capital coming in, regulation improvements is required. But that's one side of the story only. One also needs to focus on de-risking the capital, making the deal flow available for the banking partners so that they can, and building that capability within the financial institutions to kind of invest in that direction.
Okay, I think we'll take one last comment and then we'll move on to the next, because I'm also conscious that we need to keep on to the timings that we had suggested. Yeah.
Sure. So Ramraj, I think for mine, it ties in with what you'd flagged earlier. If at times blended finance can look like a hammer looking for a nail. And I think it is the variations of what and the type of blending we've also talked of here. Some of that is outcome financing, which is more about saying, can we get social programs and replace the grant financing with something that's more efficient? That is definitely one part of it. But I think for us, as well, looking at Ankur Capital, of what are some of the other opportunities here? Historically, we've operated as an equity fund. But for us to say, there are changes in just how digital banking has actually been able to penetrate the last few years, what UPI has been able to get to as a penetration level, what revenue-based financing has allowed a lot of other new age lenders to actually start collecting in ways that previously wasn't possible from a range of SMEs. So with some of these upcoming technology trends that have started to come into very specific market niches, can that start to apply of saying, can you now move the banking industry to be able to access, and banking and lending industries more generally, to access a different type of client pool? And this goes to what Karen had flagged earlier as well. It's not just about outcome-based. There's other opportunities in programs like guarantee programs that can get structured. And can that be used to incubate and start off saying, how can we now get these innovative technology tools to be incorporated in with lenders to create a new lending instrument? So I think separating out those as opportunities, both opportunities inside blended finance, will probably be an interesting way for us to look at it.
I think your earlier point on, and your point around blended finance being a solution looking for problems, I think it's very important to have an issue first approach and then move to blended finance. Not every issue, not every development challenge necessarily needs a blended finance solution. You know, some could be just grants, some could be actually just be supported by debt and equity. So I think it's very important to keep that in mind. And secondly, I think blended finance should ideally be viewed as a tool to serve as a conduit to get more sustainable capital into a particular kind of intervention or sector. And lastly, I think blended finance is probably just one part of the solution to the larger problem, and I think there are a lot of other things that need to accompany it. So,
Thanks, Apur. Yeah, so I think before we move on to the next topic, I just had a broader point to make, which is one of the biggest challenges that I see in blended finance is the value for access is it's very difficult to articulate the value for access. When someone doesn't have funding, the fact that you're getting him the funding, now let's assume you're getting him the funding at 17%, someone's going to say, hey, you know what, we did all this blending, but it's still 17%. The reality is that guy, prior to this never had the money in the first place. So I think it's going to be very important for us as we are building this to be able to showcase, what technically is called the contribution, of the entire transaction. Because otherwise, and I can tell you, initially in the period of the pandemic, IIC was trying to work with some of the partners to structure a small COVID fund. But we recognized that by the time we blended it, the interest rate was still coming to be 13-14%. And then some of the donors said, boss, if I have to give money at 14%, that's so expensive. So optically, the cost of funds becomes so, visible relative to the power of access, that somewhere I think showcasing the value of what is being brought and how this is actually making a difference, and how without this we may never have achieved what it is that we have achieved, is something which is very important. And I see that it's a very structural issue that many of these transactions face, because eventually if you're going to give somebody money at 14, but the reality was earlier he was getting money at 40%, or maybe he was never getting money at all. Maybe some of the startups that you have supported without this would never have got the money. but that's a much more difficult communication sell compared to saying I gave somebody free money or I gave it to them at 3%. And I think to me, that discipline of that communication challenge is something which, at least personally, even in my earlier career, I've struggled with a lot in some similar kind of products, which is because it becomes very difficult to showcase the utility. And I think fundamentally, that is one of the issues also, Apoor, I feel, is that, to being able to sharply articulate and showcase the utility of how your transaction has made a very substantive difference, I think becomes, yeah.
Can I add to that, Ramraj? I think the utility can come from showing the measurement of the impact.
Impact.
Because what's so unique about this product class is that it talks about outcome-based funding, right?
Yeah.
So I think if we templatize at a sectoral basis, people are used to funding enterprises, but not necessarily deep impact SOCMs or NGOs.
Yeah.
So, and there's three types of impact, if you put it very broadly. One is human impact, which could be education or healthcare levels. So, and that's notoriously difficult to measure. The risk investor wants to measure it simply, the outcome funder wants to measure it more robustly. Second is environmental impact, which is easier to measure. Tons of waste diverted, megawatts of energy delivered, and so forth. And the most important, which we don't talk about, which is there in the West, is government savings. Right? So we can say, look, guys, we're supporting and funding these NGOs at 13%, 14%, 15%. They didn't have funding before, but we're measuring some aspect of social return, which no one else is frankly doing.
Yeah.
So that becomes the basis for articulating.
I think we should move on. Pragya, next.
I think we should segue, and this is a good segue. I can see two types of conversations which are happening, and these are probably going a little bit more product specific, some which are oriented towards the participants on the credit side, for example, banks and credit enhancement structures, and the other segue which is getting into really looking at philanthropic capital and foundations. So the next two, and we can have these as two separate discussions or we can have these as combined. Vedant, can you just go one more ahead? Yeah, so these are the two, at least, that we wanted to pick up for this discussion, where we look at credit enhancement tools at one side of it, and then we look at results-based financing on the other side. I think that's also some of the conversation that we were seeing. So I'll again open it up to the floor. We can start off with either. I think Archish wanted to start off, and maybe we can follow up with that.
Thanks, Pragya. So many things have been discussed so far, right? So the challenges that Karan mentioned, that the government is now trying to be a part of this, and we can, given our experience of last 1.5 years, 2 years in the blended finance space, we can surely say that the future of development finance is to blend. So we started with the aim to make it a $100 million facility. We created now a $250 million facility, right? The sole reason, I would say, by how we were able to do it was to bring in the commercial capital in place. So the commercial providers are interested, provided we are able to mitigate the risk. And one of the major one of the tool that everyone knows is the credit guarantee, right? So when we started creating an individual level structures where we were giving a partial risk guarantee against a particular solution, right? So what we realized was that if we want to scale these things, we have to go the portfolio level route, right? So we have an existing guarantee facility available with IndusInd Bank, where USAID has provided a partial risk guarantee. Now we are aiming to make portfolio level guarantee instruments where a first loss guarantee can be created if we really want to scale up the whole blended finance model. So while partial risk guarantee at the end of the day takes care of the risk at the bottom line, right? What we are not essentially doing is to how we can reduce the risk at the start of the project, right? So a first loss guarantee makes more sense, I think, if we really want to scale this up. We have also spoken about the affordability of this kind of a capital, right? So at 16-17%, right, it becomes really non-affordable for the entities, especially in the social enterprises space, right? So while they don't have access to capital, I agree with Ramraj, right? So we are creating that pool of capital for them. But at Samrid, what we are trying to do here is we have created this portfolio level social success note, right? And thanks to Karthik and the team earlier at Asha Impact, right? So they came up with this primer of social success note. We used that primer, and now we have created a portfolio level social success note. It's a $150 million facility we are trying to create it with one of the largest private sector bank, where we will be reducing the cost of the borrowing, provided they are able to achieve certain target milestones. So it's a result-based financing, but again, it is leading to reducing the cost of borrowing. So a guarantee plus affordability is the way we think that the credit enhancement tools can be scaled up. Yeah.
Can just make a larger point here, which is important. As we get into this part, there is a general sense that CSR can do results-based financing, and credit enhancement tools are for DFIs. I mean, this is a general sense of that people have, that the only optionality which is available for a philanthropy or for a CSR foundation or any other foundation is only to do the pay for performance or social success note. Does anyone want to just talk about this? Because I think this is something which is a very important, let me not call it a misconception, but an important sort of sense of belief that I have intuitively felt that a lot of people have. And I think it's very important for us to just maybe Himanshu or anybody else
Prachi wants to speak about this.
Yeah, please. Prachi, Himanshu, anyone.
Hi, hi everyone. It's great to have this conversation. I'm Prachi Wendless from Michael and Susan Dell Foundation, and I wanted to draw upon several of our experiences to answer some of your specific questions, Ramraj, but also the general tone of the discussion today, right? So you know, we've done the first Quality Education Impact Bond together with British Asia Trust, and then the Skilling Impact Bond with NSDC and several other funders, including British Asia Trust, with USAID, the Revive Livelihoods Fund, and numerous credit guarantees and credit enhancement schemes, social success notes. So, and we are a private foundation based out of the US. So, you know, just to your question, Ramraj, I don't think it is limited to saying that, you know, we should just, philanthropic foundations should just be using or looking upon, you know, one type of an instrument. It is much more dependent on what the mandate of the organization is and the variety of tools that can be used for that purpose. On the second and the third questions there, just drawing upon our experiences from all of these engagements, and also, you know, some of this conversation around the role of policy and, you know, what can or cannot be done under the existing policy and what change do we need on policy. I actually feel that we are not ready for that discussion yet as a sector. It's a little bit premature to say, you know, government is restricting the funding or such instruments to happen. And I say so because of three primary factors. One, I think in almost every sector in India, and I won't paint, you know, the whole sector with the same broad brush, some sectors are more ready than the others. Metrics in general are non-standardized, right? Every single instrument, including the Skilling Impact Bond, the Education Impact Bond that we've done, we've actually gone and sort of like bottom-up thought what should be the matrix, right? And these did not exist. And even today, when I look at the Education Impact Bond, it was a private party, an assessment agency, which is coming and doing the assessments. There is no legitimacy as such of those metrics, in a sense, right? These are not the same as National Assessment Survey. In the Skilling Impact Bond, these are not the same as the information which the government looks at for saying something is like a valid outcome metric or not. And that's where I think initiatives like IBFC have a huge role to play, and I really applaud on the vision of USAID and IIC to do this together, because that's one area where we need collaborative sectoral work to put out some of these metrics and also work towards getting the acceptance of those at a government level, because that's when a sectoral movement starts happening, and not with like a, you know, silos of us looking at outcomes in a different way. So that I would say is number one. The number two I would say is that I think someone made a comment around, you know, the cost of doing them, the complexity of doing them, which is a valid concern, and that's actually expected in a sector, or, you know, in these kind of asset classes which are new and emerging. It's very nascent in its formation in India, and therefore what we also need to think about are who are the intermediaries which today if government announced a 10,000, 50,000 crore facility, who can actually bring the momentum in the sector, right? So we are talking about commercial funding and private sector participation, but there is need for agencies which will actually get this, the clearinghouse for these, the equivalent of investment banks for equity investments and such. So we do lack those intermediaries, and some of the work that IBFC again is saying they will do in terms of putting those templates out there and clarifying those structures, making it available as a public good, will make that happen. And finally, I think we are talking about blending philanthropic capital with commercial capital. As we have gone through these journeys, we've actually found the challenge is much more on the philanthropic capital than the commercial capital. Right. Commercial capital has a way of figuring out, okay, what is the return that I can make on this instrument? And if it is for me, if 6% return on an impact bond is not for me, I won't participate. But I know what my return is across different different asset classes that I'm investing in. If it is for me, I'll come and participate. It is similarly for the private sector participants, if they think there is reasonable, and I'm now talking about the service providers in the impact-linked financing parlance, if they think that this is an outcome they can deliver on, and there is funding to be had, market comes. Like market building work on the commercial side, in my mind, is lesser of a concern. I think the immediate priority is the work to be done on the development finance side, the CSR side. So while there is ample CSR in India, there is very little outcome orientation in that. So, bringing in that capital, as every single instrument that we've launched, we found there's more work to be done on outcomes financing side. We've played both roles of risk investing as well as outcomes financing. There is more role to be played on outcomes financing side, and maybe it is linked to the first and the second to, make those metrics simple, clear, available and acceptable at a sectoral level, making, having more and more intermediaries which put simple instruments out there. But I would say that, as IBFC, let's not think that, that's the easier part of the job. I actually feel that's the harder part of the job. And that's the role to play, that how do we bring in philanthropic capital, CSR capital to this discussion, in terms of them getting ready and them getting more outcomes oriented. And all of the things that you've put out are actually very much in that direction.
Yeah. Prachi, would you be in a position to talk a bit about your FinReach initiative?
Yes, absolutely.
Yeah, because I think that's a very unique initiative which is trying to actually bring grant funding into a guarantee structure. So maybe
absolutely. So very similar to the conversation that we were having earlier in terms of the credit guarantee schemes which are needed. What we found is that in the MSME credit space, from a beneficiary lens, from who we all want to benefit, the really nano entrepreneurs, which are not our retail store owners, but really the vegetable vendors, the rickshawalas, the nano entrepreneurs on the ground, are where the availability of credit is still a challenge, despite Mudra and despite many other schemes. And even though NBFCs are shying away from giving credit in that space. So what we started during COVID and now have incubated and launched an entity together with the Dwara Trust, Northern Arc, Omidyar Network and many other funders is a credit guarantee entity. It's called FinReach. And what this entity is going to do is it's actually going to provide credit guarantees as a business model on a purely sustainable financial model perspective to NBFCs to further on-lend for portions of portfolios which are actually going to lead to credit enhancement for these kind of social enterprises that we are talking about. Because through our early experimentation and pilots, we found that the quality of portfolio for the nano entrepreneurs is not poor. It's actually performing better than many of the other portfolios of the same NBFCs. But because, reaching out to them, or, the risk aversion that sets into a market when, the current almost depressionary macro circumstances are prevailing, or whenever, liquidity becomes tight in the market, this is the first portfolio that you want to cut back on. So as a mandate, this organization will be looking for NBFCs and for organizations which are actually lending to that sector.
And Prachi, how is it going to be funded? Can you talk a bit about that?
So it has the blending of capital, Ramraj, from two perspectives. One is, of course, finally it has to be a financially sustainable model, but the blending of the model is the extra risk that we are taking and some other foundations are taking in terms of providing both concessional equity in the structure and at some stage also concessional debt in the structure. But we are starting with a concessional equity structure, junior equity.
Got it. Yeah, go ahead. Sorry.
Not at all. Thanks, Prachi. And I think some of the points that you raised, it might be a good idea. I think there have been a couple of speakers who've been waiting. So Anushri from BAT, a little bit more talk around maybe outcomes financing and how you see and how you've seen the philanthropic capital playing a role in this. And maybe then Tushar, we'll come to you.
I wanted to make 3 points, right? And this is just summarizing all the discussion points that have been brought up so far. So on Ramraj's point about philanthropic capital, commercial capital, CSR, right? I think blending by nature demands flexible capital. Now, some capital in India is flexible, others not. We all know that CSR is bound by Section 135 and whatever restrictions it has set on that bucket of capital. Within that, obviously, there have been many ways in which people have still managed. We've managed. I was part of Samhita Revive. Samhita managed. I think at BAT, we are now creating custom ways in which CSR can participate within the boundaries set by MCA. But what has enabled, I think, most of the organizations to do that is the fact that it has been a collaborative and the fact that we've had very flexible donors who are not sort of bound by the same sort of restrictions. So in most of our structures, for example, MSDF, they've come in with relatively flexible capital. So if there are gaps that CSR can't address, right? CSR has to be annual, CSR has to be utilized in that particular cycle. We do the project, the product may need capital which kind of goes beyond that, but there have been other funders with relatively flexi pool and buckets who've been able to address that. So I think one critical point on blended finance structures, given all the policy, it's the same with FCRA. FCRA can't be regranted, but domestic can, right? You can do service contracts. So I think the need of the hour for these products, while we deal with all the regulatory and policy limitations that currently exist, is collaboration. And collaboration with different types of buckets of capital, whether it's philanthropic, commercial, flexi, limited, restricted. So that was one point I wanted to make. The second point, which is slightly more controversial, but comes, with sort of decade of experience working with CSR players, is just making this more accessible to CSR. I think this room is a room of converts. We all understand what we're talking about. When you talk about a guarantee structure, when you talk about a social success note, we know what we're talking about, right? We are able to relate to it. I think outside of this, when you look at the larger CSR sector and where their understanding is, and remember CSR itself is 7-8 years old, they've had a brilliant learning curve. I know there are many, many challenges and they still need to kind of really catch up to a lot, but they've had a brilliant learning curve, right? Now, blended finance, right, for them is relatively new. I think as IBFC, as an industry body, as a market maker, there is a need to make this accessible in terms of the language that we use to communicate with them, to show them the value, right? So products come later, and products obviously have corresponding value add. So you want leverage, okay, do an impact guarantee. You want to guarantee outcomes, come as an outcome funder. You want to recycle your capital, okay, maybe use a returnable grant, right? Which has no kind of interest associated or coupon associated. It allows you to just basically make your rupee or dollar go that much further. I think, again, very important to show them what's the value add, what's in it for them, and then match it up to the product, right? I think, like Apurva said, it's just product comes later. It's the problem that you're trying to solve. As a funder, what's in it for me? And I think that's a very real question, as much as we want to shy away from it. And then to say, okay, if these are your objectives, here are a bunch of products that kind of meet your requirements and you can consider participating. So that was the second point I wanted to make, is just to say, approach, to CSR needs to respond to where they are. And within that, obviously, the head of CSR is a different level. The board will be at a different level. The CFO, the risk manager, the auditors, they're all at different levels. So it's to say it's not a ubiquitous entity, right? You have to engage with all of this. That was the second point. The third point I really sort of just wanted to make, again, around the idea of doing this, right? So outcome-based financing is obviously, one aspect of it, which is what the British Asian Trust has facilitated. In our Skill Impact Bond, in fact, we have 2 CSR donors participating for the first time. It's created its own sets of challenges, but I think we are Indians, we are kings of jugaad, so it hasn't stopped us from figuring out how to engage them. It does increase the transaction cost on that particular one. It does introduce certain sort of inefficiencies, so to speak, right? But I think fit for purpose products are the need of the hour, right? So I'll just use, going back to my Samhita days, I'll use the Revive example. When we were designing the returnable grant, what do we call that product itself, right? It's a product that has seen a lot of CSR participation. It functions like a credit, right? It functions like a loan, but it has 0 interest. I think even the naming of the product went through its own iterations because we wanted to call it something that was relatable for the entire industry, right? So had we called it a micro loan, it would have just raised alarms with CSR, right? Similarly, the whole 0 coupon thing, it evolved as a response to where the market is today and what they need. So I think the limited point I'm trying to make is on products. While we have a suite of products available at our disposal with evidence around it, I think as a market, we have to be very open to innovate and create fit-for-purpose products which are simpler. It could be, as simple as a performance-linked grant done well. It could be a deconstructed DIB. It could be a loan guarantee. But I think, and that's something as an expectation, I think if IBFC can fulfill that role to get us the market intel, to say what is the market thinking, what does it need to design these products, I think for us especially, I think that would be super helpful. Thank you.
And I just want to add one point before Tisha, you take over. Hi, I'm Vandana, I'm from NSDC, and the skill impact bond that Prachi spoke of and the flexibility dimension that Anushri spoke of. I think in the skill impact bond, while the idea is to improve the outcomes, for Government of India and do the price discovery, we've also introduced intersectionality of gender there. So I think using the rarest of the rarest capital, which is grant, more effectively, I think intersectionality between various social issues in one instrument while you're blending, I think could also help us, solve for multiple issues through one issue. So the impact bond identifies model that will work for women while we improve the outcomes and do the price discovery.
Okay. Someone else?
Hi.
Hi, Tushar.
Am I audible?
Yeah.
Great, thanks. Hi, I'm Tushar Thakkar. I'm from Dalberg Advisors, and I've worked with a number of people here. Really excited to be here and having this conversation. So I just want to pull up on a couple of threads, I think, that both Prachi and Anushri spoke about. We talk about one of the questions that comes up quite often in conversations now, which is, how do you democratize this, right? How do you go beyond the 20, 25 or so stakeholders that we have around the table here, which participate and try to have literally created the market for a number of these structures and transactions. And essentially there are 2 barriers. And again, maybe at the cost of repetition, the 2 barriers that come up very often are for participation by people beyond sort of the slightly more sophisticated funders and participants that we have here are cost and complexity. It's expensive. It's really complex. And I know, Anushri, we've had these conversations often that when you go out and speak with someone who's not amongst the converted here, it is very, very difficult to really explain what's going on here. And I think what that points towards, and taking a leaf from maybe the commercial market side, which maybe was here, say, many decades ago, they really coalesced around, a couple of instruments. When you think about equity and debt now, which seem really simple, but would have been really complex at one point of time. There were a simple set of rules, a decision that we need to focus on a couple of instruments. These are the instruments that people will understand. We will, things like limited liability, etc. They were not necessarily common, say, 100 years ago, but where people really coalesced around that. And I think the role that this collaborative can really play is to think about how do we really focus on simplification and standardization of a selected set of instruments. Again, similar to, I think, what Anushri mentioned about products, which is to, and that might mean really making the hard choices to say that, look, there are some really innovative, really good ideas which are not really going to scale. And then there are some 2 or 3 ideas that we believe will really scale. And if we can create a set of rules, a set of simple ways in which everyone else can also understand and therefore participate. And then simplification and standardization really leading to the reduction in cost as well. Because then you can really bring in intermediaries who don't have to spend a huge amount of time working on individual transactions. You can bring in people who might not even need intermediaries because they understand what the products or the instruments really look like. And I think that, in my mind, is where this industry is at. I mean, the complexity, cost is part of the process. I think it would happen at this stage of where the industry is at. But thinking about where we really want to take this, it is going to be a time-consuming job where it moves from being a select set of participants to institutions to then the broader public. And I think, again, taking maybe a leaf from the commercial markets, that almost demands a segmentation of the market. There are the public markets which operate upon these set of simple products which are very highly defined and are understood by everyone. And then there's a private market which is significantly more complex. And a lot of us that have worked there know that those can be highly sort of customized, bespoke transactions which are developed over a longer period of time, which is fine because there are certain investors who might want that kind of impact, that kind of that kind of structure, and then they could step out of this democratic or larger market to actually structure it in that way. So I think that sort of to an extent points towards also the kind of role that this collaborative could potentially think about.
Thanks, Tushar. I think just for ending this segment, because we're a little conscious of the time, we'd like to move into the second segment, but I'd love to hear from a different stakeholder perspective. I think, Prabir, you had raised your hand a little bit while ago, and this is the last one on this segment, and we'll move on to the next one.
Thank you for that. My name is Prabir Kurea. I'm part of Waterfield Advisors. We're a multifamily office. And I just want to build on Ramraj's point, though Anushri covered actually most of the thoughts that I had, which I'm not surprised about because we've had these conversations multiple times. But there's a certain red tapeism to CSR, which I think cannot be underestimated, right? You have your CSR head, you have your CSR committee, you have your boards. And by the time you even reach that level, even before you reach that level, if you bring in the complexity of blended finance to that, you're going to see people running out of the room. So I think the point made earlier about simplifying this whole process is vital. We need to have that clarity. In fact, Karthik made another point as well. He said, it's important to have proof of concept and proof of impact, right? And I think what's going to be important is just taking some time to actually get those case studies, get that simplification in place, and making sure that everybody's speaking the same language. Michael and Susan Dell, while you guys are doing some amazing work, but they are still at the top of the pyramid when it comes to CSR. They are, I wouldn't like to say this, but rather the very evolved CSR thinkers in this space. Not everybody's thinking along the same lines, right? It's simple things, of just making a grant, seeing 100 children getting educated, and that's about CSR for them. So I think moving past those notions is going to be an uphill task, but just as 8 years ago, as Anushri rightly said, even the idea of a company putting aside money to give to social causes was such an alien concept, as now become so normal. I think it's just going to take a little bit of time and patience.
Thanks, Prabir. I think we'll move on to the next segment. And
if I may, anything from Ravi and Abhishek, any thoughts from any of you guys coming from the NBFC/fund management debt side of things?
I was afraid of starting to talk about this. So many things are going on in my head.
Right. No, because I think what is also important is for us to have some, the other side of how you guys are sort of looking at it, because, and I think it's important. I think several people have made the point about engaging with CSR, simplification. I think, showcasing the value. Some of that is very, very valuable. But I think, the credit side of the market, in my view, and maybe I just have a softer spot for, given my past background in the credit side. But any thoughts from either of you guys or both of you on how do you people who are actually on the front end of actually supporting, if I may say, financial inclusion related initiatives through lending, and you both have done several of these transactions, maybe some perspectives from you, and then we'll move on to the last leg of it.
So I'll go first. So I'm Abhishek. I look after Caspian Debt. We provide debt financing to financial institutions and startups across agri, healthcare, clean technologies, education. So basically everything to do with social or environmental impact. we have had, we've been lucky, we've been supported by multiple, blended finance providers. So we've in fact had partnerships with, we have six such partnerships. Basically, likes of course, USAID through the DCA, Rabo Foundation, Dell Foundation last year, Bill Grow, and of course IP Global through the Samrit program across different sectors. Now, one of the challenges that we faced is that every conversation is different. Replicability is, we've done 6 programs. I think that is probably the largest that a commercial entity like us would have done. But every conversation is different. Even, for example, with the same partner, a different facility is a new conversation. And probably, I at least don't know how to go about simplifying this. So that is one. The second aspect is that we've been able to identify a lot of opportunities. We funded more than 200 companies, all between social enterprises and startups and so on. For us, with such a wide variety of sectors, it is actually very difficult to pool together. And I'm not talking about financial institutions because I think that's a kind of a solved problem. I'm talking more about the non-financial institutions, social enterprises space. It is very difficult to pool together a sizable volume of companies or credit assets where the metrics for impact would be the same. It is very difficult. So, for example, if a blended finance or a grant provider wants to do results-based financing and wants to support us, the metric conversation is actually company by company. You can check with Archish here. We're trying to work on a SSN product on a healthcare program. They're having to talk to each and every company every time. So how do we simplify this? I don't really know. A different kind of a practical problem. We can potentially use more and more of these kind of, for example, the guarantee supports and these kind of supports. But there is there is probably a reason to find ways to incentivize. So, for example, the guarantees, no matter how cheap it is, it costs money. So it essentially ends up increasing the cost of the loan. The situation when the guarantee fee actually would help a lot is, for example, for an NBFC like us, when we make a loan that is backed by some guarantee, we are able to take a lower or a zero risk weight. Today, a DCA guarantee is available to us, which is as good as the US government sovereign guarantee, but it doesn't allow us to reduce the risk weight on the portion of the loan that is guaranteed. We have support from Rabo Foundation in the form of SBLCs, which is basically some other bank's balance sheet, but we are still not allowed to take the benefit of the risk guarantee. For a commercial entity like us, these small things, probably that's something that we can talk about later on the policy side. These are the small kind of things that actually are inhibiting or hindering adoption. And of course, everybody is aware of the fact that most of the impact-minded capital that has come into India, at least with the example of the impact investing sector, has been foreign. The moment we are talking about getting softer capital from foreign entities, and we've been trying to build actually a climate technology platform. We've been working on for the last 8 or 9 months. There is an interested entity, foreign entity, that is interested in giving us a grant to get that off the ground. We have not been able to figure out a way to get the money in. So I think those kind of issues are also there overall.
Thanks for that. I think I agree with almost everything that you said, that there are a lot of small issues which prevent some of this scaling and prevent a lot of standardization. So, by way of introduction, I am Ravi Vukadala. I represent Northern Arc, and we have done plenty of arranging transactions as well as participating in transactions by way of providing guarantee capital, etc., especially in the world of financial inclusion. Right? I just want to start off with an example of a kind of transaction that we would want to see, right, which has happened in the past. Right? All of these transactions that we have done aggregate to probably a few thousand crores. Right? But during COVID, the government came out with one transaction which aggregated to 1 lakh crores. Right? It is the perfect example of how you blend
commercial capital, cost of funds, and standardization. So they came out with a guarantee scheme for banks to lend to microfinance institutions, saying that we will guarantee 75% of any loan that can go bad to microfinance institutions made during COVID. Right? The entire 1 lakh crores, which is 100,000 crores, was utilized. Not a single microfinance company has gone there and claimed, or the bank has not claimed any default against the government. So the cost has been zero. Now, it took us so many years and so many transactions to reach a few thousand crores. But with one large event and one player of such importance, doing a standardized transaction, forcing banks to lend at 9.5% to banks which were otherwise lending, or to microfinance which were otherwise getting at 13-14%, ensured that you could get money when needed. It was blended capital because it's a guarantee, and the cost of funds was lower. So I think I echo completely what Prachi said. There is only one need, and which is finding enough people to provide that guarantee capital. As long as somebody is providing it, whether it is through CSR funds, etc. and all, commercial capital is willing to participate. So far, we've not even touched mutual funds, insurance, huge pools of commercial capital lying there, right? And probably the aim of this collaborative would be to do some of these tweaks, standardize, work with, say, CSR, get rules, get money which can come in at concessional cost, right? Because like you said, the guarantee cost increases if the one taking more risk wants higher return, which is what commercial capital intends to do, right? But if you have a DFI, or if you have somebody who's focused on impact, or a grant provider, which does not want a return on that capital, it brings the entire cost of the transaction down, provides concessional capital to the one who needs it, and provides the return to the commercial guy in there. So, provider of guarantee capital and incentivization to make sure that the guarantee cost is low is all that is needed to scale this to a degree, because we have enough of examples of transactions that have already happened in the past across segments, most notably in financial inclusion, but there are examples across the board now as well, and we can definitely standardize and scale it up a lot more.
Thanks, Ravi. I think we should now move to the last segment. So maybe Pragya, over to you.
Sure. So we can, I think, all of you have probably given us a lot of inputs already on the second segment. So there is definitely innovation in products, innovation in engagement that is being called out, in addition to obviously policy support, and to a large extent, I think also market building activities required. I would love to hear, I think there are 3 questions on that slide that you can see on the right-hand side, which is in terms of the role of IBFC that you see can be, more of an active participant, and what incremental role that we can play. What is it that we can do to enhance engagement across this diverse set of stakeholders that we are even in this room? And really in terms of policy support, any 2-3 comments that you would like to make around policy support? I think, Karthik, you want to start off with this?
Yeah, I just think it's important to sort of ensure that, it's not, put it in a very crude way, it's not a magic wand which will be able to change everything overnight or even in the next 6 months. So I think as we speak and we build this and ensure that we are building it for the long run, I think it's important that we think about what should be maybe the 2-3 immediate things we should do, which we feel are low-hanging fruit. What are the 2-3 things which we can do, which we believe will build something for the medium term, and then maybe there will be some which we will keep engaging, over a much longer period of time. I think if we can think about this when we are sort of making the comments, it really kind of helps, because we just want to be sure that we have a good sense of where we should set our expectations for the organization, such that we are able to get those small wins and kind of build on that and kind of keep the energy kind of moving up. So sorry.
So just in terms of that, Ramraj and Pragya and team, I think so many issues have been laid out. So if I was to say 2 or 3 priorities, one is on funding and the second is on policy. So on funding, I think grants are the need of the hour, right? There's a lot of large foundations who are looking at India who have not yet been active in India. So just to put it very bluntly, and I'm sorry, I know there's foundations in this room who have been active, but equity, investment, and NBFCs are very strong in our country. And at the end of the day, this is a great example. A $25 million solid grant pool can unlock $200 million of debt. So IIC can act as that channel, saying we have all of these equity investors, we have all of the NBFCs. Now India needs large grant strategic support, and mobilize 3 or 4 big foundations. They're looking for an avenue to do that, and They've not been given those offers yet. And second is on policy, right? That we can make a list, as someone has suggested, of 10 to 12 mid to senior level regulators and policymakers, which has already happened, and to start to actively engage with them. These could be at the municipal level, these could be at the state level, these could be at the national level, and for different sectors, right? So in WASH, there's some people who are interested. And then to start engaging with them. So for example, the Capacity Development Commission of India, the third leg is obviously data, to Tushar's point about simplification and stuff. So the IBFC will finally, no one has this data, to say, look, these are the segments, these are the sectors, these are transactions, this is the basic stuff. And then the thing starts linking up. We can go to Capacity Development Commission of India and say, we have the data and so on, can we start training your bureaucrats? It gives a more fillip to engaging with those policymakers so they don't just feel it's one-off.
Yeah.
They can see that there's a thing going on.
Yeah.
And then the foundations piece, that if we can mobilize grants. So to me, these would be the three core aspects of it.
Got it, got it. Someone else? Yeah, please.
Yeah, hello. Yeah, I'm Siddharth from the Bill and Melinda Gates Foundation, the Agriculture Development Team. One thing that you said, Ramraj, when we started was around a proof of concept. And I think a lot of things around standardization, simplification, capacity building of foundations, etc. If you can pick up some of the pieces which are kind of the need of the day, and the whole the council or the collaborative can rally around that bit. For example, carbon financing, now which is non-existent in India. Climate financing is non-existent. If you can rally around that, then if one piece is solved, then a lot of learnings emerge from there. And what would be important therein would be, from my perspective, is to center it with a government agency. It could, and not at the municipal level, but at least at the state level, because that's when the understanding will grow for the government as well. So that's one. The second thing I just wanted to kind of highlight is that whatever I've heard, since I come more from the philanthropic side, the government side, is that how do the CSR funds and the philanthropic funds fit to the needs of the private sector? What I haven't heard is the other way. Yeah, and it would be important to, means just from my perspective, it's important to see what is the leap of faith the private sector needs to take. For example, are there, in very small terms, means Prachi alluded to that, are there smaller ticket sizes but blended finance instruments for FPOs, let's say? And to his point, he said there aren't enough sizable opportunities, which I agree. But then that is also a problem we need to solve, because startups are sexy, but the numbers in terms of impact lies in the FPOs or the agriculture piece. I think one more thing that is perhaps undermined is the value that the private sector brings in to the government and the philanthropic bit. So some of the people who have worked on the philanthropic or the government side is, there are no exit strategies. If there's an FPO promoted by any government agency or a philanthropy, when do they exit? They don't know. So they keep promoting that, and it's an adoption mechanism. What private sector can bring in as, if I may say, a TA, is that you need to move out and you need to have an appetite for failure. That is something that is completely missing in the sector, and perhaps that's something from the blended finance side, maybe just using that as a platform that the collaborative can maybe try to bring in. So those are my limited points.
Great.
And I'd like to add that probably, we also need to change the narrative around risk perception. In many of the cases, there's isn't enough data for lenders to really price risk, but it's a perceived risk. And IBFC as a platform, I think it will be helpful if you could, drive that narrative that it is not as risky to lend a nano-entrepreneur or lend for skilling. Like in our case, we are, co-financing skilling loans with NBFCs, but we're not covering their default risk because there isn't risk. They have data, but the perception is lending for skilling is highly risky.
Got it.
I think if you could drive that agenda, drive that narrative as well.
Got it. Yeah.
I think we have two speakers waiting. I'll just go there to ACT grants and then back to you.
Sure.
Yeah. Hi, my name is Akanksha. I'm from ACT. I want to think a little bit more about that second bullet point there. How do we get more CSR, domestic philanthropies, family offices to come in? And that's one thing we think a lot about at ACT, given we have access to this growing population of unicorn founders who themselves are, hopefully going to take the philanthropic journey in the coming years, but also are building organizations that are going to look to deploy serious capital into social impact. And so one thought that I think I keep coming back to is, we're finding that this side of the sector is very disaggregated and has multiple theories of change, and so everyone is looking to create impact in lots of different areas, right? And while I deeply resonate with Prachi's point, we need clear metrics that can help galvanize both funds and can help give shape to the impact that we're creating. I think there's one layer even above that, which is what are some things that we all want to shift, right? What was really special about COVID was the North Star was very clear. Everyone could rally around it. Everyone wanted to shift some of the big issues we were seeing come out of it. And so, at a higher level, I think a lot about similar to UN SDGs or coming off of the NEP, like are there 6 or 7 larger things that we want to shift in the country over the coming decade, right? It could be foundational literacy and numeracy, tagging off of the NEP. It could be increasing labor force participation for women. It's at 19%, one of the lowest it's ever been. COVID has had a huge impact. But what are those 5 or 6 North Stars that are going to be really game-changing? And these could be across education, health, agri, and more. And that allows us to actually then really cement and go after, as IBFC and as a collective of people to say, now let's kind of really streamline some of the metrics around these and then make a larger case on how many, many more people can come on board. So I think that's one big one, to just galvanize people, bring people together, and for all of us maybe to input into what could be some of those game-changing areas to shift. The second is, the complexity is real. I know many people spoke about it. I don't think there's going to be much way around it. Logically, intellectually, obviously, I think all of us here agree that blended finance has a lot of value to add. One of the stakeholders I still do think about a lot, and I know Ramraj at the beginning you said, we don't interact with founders and entrepreneurs, but I do think at some level that's going to be really important. How do we really talk with folks who are on the ground executing, founders? I think just to kind of, again, understand their pain points with these instruments, right? Having those conversations early, what will need to happen to really streamline, make it easier for them. And so I don't know at what point that happens, but I do think that's going to be really critical also. We're going to need to move along with them to make sure that they also access these opportunities in the manner that's envisioned for them. And I know that is a double-edged sword right now, right? Like I'm hearing very different narratives from folks about whether or not they even want to access blended finance or outcome-based financing. So those are 2 quick high-level thoughts on what we could all do together.
One, I think grants and grant makers can do a lot here in this market, and I think this is something we've realized with the credit enhancement tools that we've done, our DCAs and other partial credit guarantees that we do, that risk mitigation can only help you so much. There is so much else that needs to be done in terms of private sector development, right? Technical assistance to entrepreneurs, technical assistance to funders, investors, to even understand the market better, to reduce the perceived risk, like you said, right? And be able to differentiate it versus the real risk. Creating an enabling environment for enterprises. So, I know we've had many conversations with Caspian also about this on the WASH side. How do you make enterprises more bankable if their revenues are linked to what municipalities pay them and when they pay them, right? So how do you work even with municipalities to improve their financial stability, to improve capacity within municipal officials? So, right, working across these different things, enabling environment with Revive, how do you create market linkages for small entrepreneurs. So I think one thing that IBFC can do is really break these different interventions down into bite-sized pieces that maybe CSRs and philanthropies can bite off under the current policy paradigm, right? So that's probably one at the short term. Second, I think maybe bringing all of us together and start thinking about things maybe sectorally, right? WASH will have completely different challenges which will require different interventions around enabling environment, technical assistance, health may be different, education is going to be different. So how can we create those subgroups and start thinking more sectorally and what's needed? And I think between all of us here, we have the right kind of people in the room who can provide that TAA, who can work with the government on the policy side, who can provide financing from the debt side. So I think just bringing those things together. And I think maybe slightly on the medium term as we start thinking about expanding the policy paradigm as well, right? I think let's think about what structures have already worked versus what others need to come into picture. So, we keep hearing about social venture funds, right? That can potentially theoretically do grants and returnable capital within the same structure. But I mean, please let me know if someone's done this, and I'd love to know, because we want to do that. I'm sure others want to do that as well. So how can we increase more information around structures that theoretically are supposed to do this and actually move that from theory to practice? And I think lastly on the policy side, let's also accelerate some of the existing government initiatives. I think Karan spoke about the Sustainable Finance Collaborative. How do you accelerate that, bring more relevant transactions that are already happening? And also, things like social stock exchange, how do you scale that up? How do you bring more players into it and really, put something on there?
Yeah, I'm Vinay Arora. I represent S&P Global. I see there's a lot of potential and scalability in the CSR funds that we have with corporates. So for us, if I talk about myself or our company, we have around 4 to 5 crores of cash that we're sitting on every year to invest in CSR activities. Now, how we can tap this money from all corporates, maybe that's something a challenge, or maybe something you need to think about from IBFC perspective. But if we can tap into this money, every corporate has a mandate to, I think, spend 2% of their profits every year on CSR activities. That's millions of dollars, we can have for sure. We worked with Samhita, I think, for the Revive initiative. The experience was fabulous. The kind of transparency they bring. We could see, how the money is being invested, or they share Gantt charts, they share, the videos with, people who are actually using the money. I think it's a great way to really, put the money in the right way. And also, I think maybe IBFC will have to work with, with more of Samhitas, or, enable or empower, I think, create more of those organizations, or partnership with them to really ensure that we tap into that fund that is sitting with corporates in a huge amount everywhere.
Hi, I'm Shivika from Asha Impact. I just wanted to make a quick point on the second, question on CSR engagement. So over the last 6 months, Asha, along with the IIC, has been working on the first landscape report, so to speak, for India, for the blended finance, market in India, and we're really attempting to cover the last, decade of transactions and activity that has really happened here. I think we must have spoken to 80% of this room for contributing to this report. But that report actually has been sponsored by Societe Generale Bank's CSR. So, and it's a very good example of CSR really being interested in sponsoring a study into this space. And over the last 6 months, while we've been presenting our findings and working on it, it has really, helped their own understanding and education of blended finance. And so, now it's come to a point where they are interested in actually deploying capital, and they've come to us and said, are there any deals in the market? What kind of transactions can we participate in? Of course, the regulatory and policy framework remains gray, and we're not the experts in that space. But I think it really has gone a long way in, bringing them to the table where they've come to a point where, their understanding is enhanced, and they're really interested in at least understanding more and, understanding a little bit more on what kind of transactions and, also sectors of interest that they can participate in. So I think that, along with, of course, creating a great knowledge repository and database for the industry that, we can all use, I think it's really helped take the conversation forward at their end as well. So maybe that's, another way to use CSR to really build up the knowledge base for blended finance.
Yeah. So thanks for mentioning that, Shivika. So I think we will be releasing the report maybe over the next couple of months, and I think more importantly, we will keep that. This is a one-time database that we have put together, but the idea is to maintain that database. Many of you are already getting our publications from IIC on deal flow and equity and all that. We will do a similar one for the blended finance. The one time is always difficult. The ongoing is not that difficult because, I mean, it's not a, as we've all time and again said, this is not a market of thousands of people. It's a bunch of 40, 50, maybe at best 60, 70 people. You know, you got to just send them a mail or one call every other month, and you will have that data. And that's something that we definitely do want to do. We are not suggesting that that will transform the market, but it will let a lot many more people know as to what is happening. And that's going to be an open source database that we will make available to everyone, so that at least, at the very least, that information is made public. Any other comments, any thoughts? Yeah, Himanshu, and I think, yeah.
Basically, just to add to what everybody said, I think so when you are going out and selling the story to whether it's corporates, whether it's the policymakers, I think the two issues or 2 points that you need to highlight or amplify a lot. One is the leverage capacity of blended finance. I think that story has to come out very, very clearly. And unfortunately, that does not come out very clearly when we talk only about impact bonds within this space. It comes through the other different instruments that is there. And second part is that you're creating sustainability in the long run with the kind of enterprises you are working. So you are putting in capital or grant in one go, but it's creating long-term sustainability in that business, and it's not a one-time transaction that you're doing. And again, next year you have to give the same entity again a grant to work further. So if you can kind of build a story around these 2 points, at least we have seen selling the concept with these 2 points at the forefront has helped us to get many CSR players forthcoming to kind of invest in this area.
Got it.
And the other point is that a lot of people beyond this room are sitting on the fence.
Right.
And those guys are low-hanging fruits. We have come across at least 10 to 15 such people who are just trying to understand and ready to take the plunge.
Got it.
So I think those should be the first people to go to, so that next time when we meet, we have a bigger room of stakeholders.
Yeah, please.
Hi, this is Smriti from Samita. We're building Revive, and it's wonderful to see so many people talk about it. Actually, has already made my point, which is that beyond this room, there are a number of people who may be doing something very similar to what we're talking about, but don't really understand or call it blended finance. So this is also the point I think Ramraj was making when we opened the conversation, which is that let's take a step back and actually define what blended finance means, and really try to demystify it. You know, what are the risks, etc. I'm not going to repeat what many people have said, but just wanted to reiterate that moving beyond the people who already understand blended finance is also something we should focus on.
Great.
Ramraj,
I think just two more comments, Nishu and Sumesh.
Yeah,
and then
Nishu, and I think we have to close. I think we are running short of time now.
Right,
Yeah,
hi, I'm Nishu Malhotra. I'm working with IndusInd Bank, so I guess I represent the commercial capital, apart from Caspian and the others. So just, a couple of small points. We've been one of the pioneers, I would say, from the banking side to kind of actually say that, impact, financing is something which we want to focus on. Almost 34% of our book is towards sustainable activities. But I think where we've kind of struggled is, I think, two things. Banks do all of which, that we've talked about, whether it is financing MSMEs, whether financial inclusion. But what is it that we are talking about is missing from the landscape today, right? The micro entrepreneurs or people who cannot actually put up collateral on the table. So I think the understanding with banks as to, which is the gap which they need to kind of step up and fill, I feel is missing, whether it is with private banks or public sector banks. And I think somewhere it also comes from the regulatory landscape. We measure financial metrics, we don't measure social metrics.
Yeah.
So, somewhere a policy intervention wherein the Reserve Bank of India also incentivizes banks to kind of account for social impact will help banks kind of take that plunge.
Or at least disincentivizes the other side, because that is also an equally important incentive.
So a lot of talk, I think, So a lot of talk, I think, is like talk. So, we do all our ESG and ESMS, but really to drill it down at the ground level is what is required, I guess. And second, I think our expectation from a collaboration like this would actually be to also consider structures keeping commercial capital in mind, because we've had some great discussions on social bonds, and eventually after a lot of interesting discussions we realized that the product was not really geared for banks. It was a service contract. So I think somewhere that will kind of help us participate. We're keen to participate, but somewhere that knowledge sharing and innovation is required. So, just thank you.
Someone
so much.
else there, yeah, sorry.
Yeah, just
Last.
a quick point, to underscore what colleagues have already said on dissemination. I think there is a lot of merit and efforts, which thanks to IIC and USAID, you're already putting that together. These newsletter dissemination events, what has gone well, standardized metrics. So, just to summarize all the points, I think it's very, very important to build the evidence base on, things that have worked, which can attract, people said sitting on the fence. So a lot of people who are sitting on the fence with these success stories. And congratulations to both IIC and USAID for taking a step in that direction. Thank you. Thank you.
Abhishek, you had something.
Just one point. Can you do a convergence for India? The way they,
Yeah.
for example, curate funders, projects, it will make it easier for folks like us to bid or even attract other funders.
Which is the whole idea of the database and the ongoing maintenance of the database, because I know that the moment I start publishing, first of all, I want to publish not just deals which are done, I also want to publish deals that people are thinking about. So let's say, Tushar, we've spoken many times and you tell me that I'm working with this company. Maybe you have one funder, and you may even want to keep that information right now anonymous. You may not even want to, it may just be a concept saying, we are doing this here and we are looking for some people, and that's something that we can publish. And who knows, someone else is interested, but you may not know that individual, and even if you know through a room like this, there may be somebody else, Murugappa group sitting in Chennai, you just don't know how are you going to reach out to that person. So I think, yes, that is something clearly, Abhishek.
The other side as well, where the
other
funders,
side also,
the
equally.
other funders are interested in doing something specific, they
Equally.
talk about it and see where they can find people.
Yeah. So I think, I think we just going to wrap up. I think we are just about in time. So maybe Pragya, any last comments before we finish off?
Yeah, I think there was a lot of insightful discussion. So thank you so much for really everybody. I think 80% of the group participated, if I'm not wrong. So really thank you everybody for such a warm participation. I think the last agenda that we had was just to showcase to you the launch of the newsletter, the IBFC bulletin, which we are releasing today. And this, I again firstly like to thank everybody who was able to contribute to this inaugural edition for us. And it's available on the website that you just saw, which is blendedfinanceindia.org. And we look forward to more interesting opinions, case studies.
We're not publishing it like in paper. I mean, I think that generation is over now. So it's all on the website. So we have just one copy here. We just for old time, maybe I'm a little older, so I've just taken 2 copies. But I think it's really, the idea is, and the idea will be with this to keep publishing a lot of the information that we have, some of the interviews and so on and so forth. I just wanted to take a minute to just quickly sort of summarize a few points so that, we are all going out with some common shared understanding. I think the way I saw it is there are really, 3 or 4 broad heads under which we are talking. One is really expanding the market, education, exposure. That is one big part of the market. Second is bringing these transactions alive, data analysis, case studies is the second. Third is advocacy, particularly with the government, and figuring out what is it we can do. It may be a long, sort of a journey, but we should begin that process. And the fourth one, which is really, in my view, slightly more complex, and we have to think about, is the whole idea of simplifying and templatizing. Because every transaction, in fact, effort is going on to make it bespoke. So the whole idea is to reverse that process and make it standardized is a journey in itself, right? So I think, that's the part which I think Prachi, several other people have spoken about it, is something that we really need to think about. Or is there a way for us to sort of disaggregate or aggregate some of the transactions and start presenting information in a somewhat more simplified fashion? We'll have to think about it, because that is the important part, Prachi, because we've had extensive discussions even with Niti Aayog on equity, where they tell us that, can you present, we have a standard format of aspirational districts. Can you present your equity data based on that format? Okay, and that format, if we are talking London, they are talking Tokyo. So, there is absolutely no commonality. So, for them, they're not even able to understand what we are presenting there. So, this is something which is valuable, but at the same time, we do see that, it will take energy and effort. How do you really simplify? How do you really templatize? is really a question that we have to kind of think about. So with that, we are kind of coming to the end of...
Yeah, I'd just like to end with a thank you, I think, both to the IIC team as well as the USAID
USA,
teams for really bringing this event I think it was a very short notice event for a lot of you to really join us from all the way that you've come from.
Yeah, just to clarify, I think this is the launch, but we obviously would want to do a lot more during the year. So I think what we need from all of you, one is your insights and support so that we are doing the right things. You know, the whole idea is not to keep doing something in a very busy way and, you know, yes, the energy is good, but how do you really keep that focus sharpened? So the people who are from the commercial side, you know, whether it is the NBFCs or Nishu from IndusInd or some of the others, can you help us as to what is it we should do in terms of engagement on the commercial side? Similarly, we have people on the CSR side. How can we make that conversation more interesting and simpler? And I think, you know, Anushri made the point of fit to purpose. And I think it's a great point to say that instead of telling them what we want from them, can I go and tell them, boss, here is how I can help you achieve your goal. And I think if we can shift that, so I think that is something which is going to be valuable. Because the collaborative in itself or IIC in itself doesn't have this domain understanding. We have a broad understanding of commerce, finance and development, but really you are the guys on the field doing the transactions. So I think what we are looking for from all of you is really to bring those insights, to bring that, you know, sort of thinking as to how is it that we can take forward. If we are going to government, maybe Himanshu, what is it we should tell them? Because we can't go and tell them 5 messages. I have to go to them with 1 or maximum 2 messages. So I think those are the insights, those are the inputs which will make the whole IBFC a lot more powerful, a lot more focused and a lot more sharp. Because, you know, time is at a premium for everyone. So every session, everything that we do has to be focused and people have to see value. And I think the last thing that we need from all of you is just evangelization. So, you know, if you can help us reach out to 5 people on CSR or 3 more bankers, we can say, okay, how is it we can build something for these people? That would really help. Because, you know, otherwise every conversation for us is a 1-hour Zoom call and then we explain it. It's not a scalable model. But if one word from 10 to 10 of your, you know, closest connections in whichever sector can really bring us that leverage. So Himanshu spoke about leverage on the balance sheet. Here I'm talking about the leverage of goodwill that we are all expecting from all of you. So with those sort of closing remarks, thank you all for coming. Thank you.
अगर किसी का फेस कट गया तो फिर बाद में बोलेगा कि हमारा फेस नहीं आया. So that's why I'm